Did the Fed just kill the spring market here in Texas, specifically Plano, Texas, where I'm based out of? We're going to start off in this journey. We're going to go through the most recent announcement by the Fed chair talking about keeping interest rates high. So, we're going to show you some data on what impact that's had on the rates as of March 9th. I'm going to show you some data about where rates were going and what's happened to them, as well as just what that means to buyer demand and where people are going to enter and exit the market. Then I'm going to share a little bit of data just on all the talk around foreclosures continuing to spike. Um, that scares a lot of people. We're going to go over that, and then we're going to do a deep dive into really what were the February numbers and what impact that has to you, whether you're thinking about buying or selling. All this is relevant information for right here in our local market. So we're going to cover the data specifically for Collin County, for Dallas County, and for Denton County, so the surrounding areas in North Texas. Hopefully, you're going to find this a lot of information as we go through this. Just let me know what you're thinking. Post some comments down below. Let me know what you think is going to happen with the interest rates, whether it's going to have an impact on the spring market or not. Maybe it's going to affect what you're thinking about doing. So let me know what you think about that. And now let's go ahead and dive right into what the data suggested. So let's get into a little bit about what happened yesterday with the rise of the interest rates. Actually, really 2 days ago. Sorry, if I think about this now, because the day is March 9th and mortgage rates are at 7%. This is in large part to the announcement from the Fed that basically they think that the interest rates need to stay high, if not go a little higher, to help continue to fight their war on inflation. So they're not happy with the inflation numbers. The consumer price index is still higher, yada, yada, yada. The bottom line is so they basically forecasted that more interest rate hikes are in the future, and the mortgage rates have responded in kind. So this 30-year fixed rate now is at seven, or projected, whatever they want to look at it. It's at seven. And based on that, this is important because that 7% number is kind of an anchor point for buyer demand. So we'll get into that in just a little bit, but let's look at what the numbers are telling us or where things were last year. And this corresponds to some of the market trends that we saw, which is the mortgage rates as they went down. We were seeing stronger buyer demand. And now with them going up, as we're seeing here, basically through the beginning of February throughout till 2 days ago, they were on their way up, and then they shot up pretty dramatically to almost right at 7%. So just a little bit lower than they were in November of last year. So this is really a big key indicator for where things are going to go, what's likely to happen. Uh, the interest rates have a strong impact on buyer demand. So what this is saying in summary is anything below 6.5, you're going to have good buyer demand. It starts to weaken as it goes up the stack and clearly becomes very weak buyer demand when it's above seven. What I see anecdotally in working with my clients is they have an appetite for anything under seven. They've kind of aligned themselves to the fact that if they're under seven, they feel they're getting an okay rate. They'll be able to deal with it. They might be able to refinance in a couple of years. They might be able to work a deal where they can get, like a 2-1 buy down. So it's a little bit cheaper in the first 2 years and hopefully refinance. Seven, I think, is a hard barrier. And I think it's going to be hard for many people to actually buy. I think it's both a psychological block, and then quite frankly, it's really hard to finance a 300 $400,000 property at 7% when you're just barely trying to get started and get a starter house. So there's a whole nother series of discussions around home affordability that are truly impacted by the interest rates, amongst other things. That being said, it's going to be interesting to see what impact this has on the spring market, because if they hover and stay above seven, it may really dampen what's going on. For any kind of market, there's pros and cons. So it's not necessarily all bad, but I would definitely like to see it in the sixes because I think that we would see both benefits for buyers and sellers. I think if it's above seven, I think it's a detriment to both parties, quite frankly. People that can afford to buy are still going to be able to find things, and they probably will be in a better position. But from an overall affordability, I think interest rates above seven are bad for everybody. So this just kind of shows where things are and how we're hitting this line of very weak buyer demand. So it'll be interesting to see throughout March and April what the interest rates do to the market. A good reason for you to subscribe because now you'll know next month when I release my video, we'll be able to go over what impact did this have, and we can discuss that. The data showed that there was actually some pretty good demand indicators out there. Prices, while they dipped and were going down year over year, were up. So there were signs that the home price were actually staying resilient, and supply was also being staying restricted as well. It was not a perfect storm, and it wasn't creating the feeding frenzy of the pandemic, but it was actually kind of a return to normalcy, and that was really a good thing overall. All right, let's take a look at the market data for the trends through the month of February of 2023. This is going to give you an overview of really what's going on in Collin County, Dallas County, and Denton County, pretty much all of North Texas. But this gives you a good sense for what's going on in Dallas, Frisco, Plano, all those areas. This will give us a good sense for really the overall market conditions of what's happening in North Texas. So let's start off with the median list price. So what this is going to show us is basically what people are listing their properties for. And at a high level in Collin County, basically properties were listed at 5.2% year over year. So back here in February, properties were being listed for 499. Now they're being listed for 524.9, so almost $525,000. Not a lot to this story, other than as you can tell, then properties have continually gone up. If you look at this through the pandemic, it's really funny. The first year, list price didn't really go up; it kept selling over list. Then we got into aspirational pricing, and then the market went down. And it's taken a while for the market to really normalize. And I don't think we're quite there yet. But what this tells me, based on the next one, which is going to be the median sales price, we're still selling under list. So clearly 480,000 or $85,000 for the sales price, as the average is lower than what we were seeing over here for the list price across the board. So the averages just show that properties are selling below list across the board. There's a lot of properties, so every house is unique, and many houses are still going above list, but tons of them are not. Part of that is just catching up from the pricing. So, looking at this number, I guess the good news of it is really year over year from February 2022 to February 2023, there was a 2.3% increase in the sales price. So the good news for it is overall, even though we had some really historical numbers throughout the May through August time period, and they've gone down, year over year is still up. Now that being said, I suspect as we get into the summer this year, these numbers are going to look worse from the year over year perspective. But you know, everything is about how long in the market in real estate. Because if you go back to here, your property is appreciated quite a bit across the board if you have a home. And the next one, my least favorite data point, but everybody loves it. So let's go ahead and get it out of the way, is the price per square foot. This means almost nothing because every house is so unique. You can see everything kind of smurging in this 201 to 204 price range right now as a price per square foot. All of the areas basically are following a similar trend. And the reality is they're all fairly close, not enough to make a statistical variance from my perspective. But I'm no math major or statistic major either. So take this for what it is. You have the data: 204 if you're in Collin County, 201 if you're in Dallas or Denton County. Let's look at days on market. Now we start getting into what's going on actually in the market. So this is how many days a property is on the market before it is before it's off the market and sold. So the reality of it is, in this pandemic in this pandemic era, in the pandemic era, let me just pause. In the pandemic era, it was relatively no, almost low numbers, almost above or below 10 throughout. And then as interest rates rose and more properties got on the market, you started seeing it going up and up and up. Right now, it's a little bit of a mixed bag, in that Denton County is continuing to go up. Collin County has somewhat stabilized, and Dallas County actually is going down. Too soon to see whether or not one of these is a trend or not across the board. But the bottom line is, if I look at it, really, it seems that we are going back to a market where It's more normal, even though like in 2020 and 2019, these numbers aren't all that dissimilar across the board. It kind of depends on your perspective, but in a long enough timeline, these numbers aren't off from where we've been historically. They just seem really high based on what we've all been through for the past 2 years. The next one is our percent of original list price. So what this is, the percent over or under asking price that a property was sold for. Clearly, we are selling right now under list across the board. I would caution you, though, there are still many properties out there that they've updated, that they've made look good by staging or having their own. They have good design sense, and they made it basically move in ready for potential buyers. They make it super easy. They market it. If it's a good property, it's represented well, and it's priced appropriately, the property will sell around close to or above list price. That's what we've been seeing. Now, with interest rates changing, it might impact this and might put further pressure on price. So it's a little bit to be determined on that. But in general, where the market was headed and what I was seeing anecdotally and what the data suggests is that properties that were priced well, or sorry, priced properly and look good, were still selling around or above list price and very quickly for that matter. Month supply. So this is really the amount of inventory. Historically, or by definition, anytime that the inventory is less than 3 months, it technically is a seller's market. But I hate using that term based on where we've been throughout the pandemic, because it certainly doesn't feel like a seller market when prices have dropped, when time on market is higher. So all of those things make it feel like not a seller's market. Technically, it is, but it doesn't feel like one, that is for sure. That being said, it does seem like it's made a shift back to some level of normalcy, but still, having supply of inventory of less than 2 months shows that there's not as much inventory out there. So buyers, while they have more choices than they did during the pandemic, it's still limited compared to what it was before. And this is one of those factors that's going to be really interesting to see. Does the fact that interest rates are at or above 7, is that going to make it so that fewer sellers want to list their house because they're just afraid that the buyer demand won't be there? Or will it actually have the buyers staying out of the market? I do not know whether or not that's the route it's going to go or not, but I think this is where this interest rate is really the most important thing that's going to drive what happens in the spring market. And if we think about what was shown before about where buyer demand is, if it's at that 7%, it's likely going to have some kind of impact. It's just going to be a matter of, if it scares off enough sellers and enough buyers, then the market's at an equilibrium, and these numbers may flatten out. If it stays below 7, people may still continue to buy, and even as more inventory comes on, there's plenty for everybody. So jury's out on this one, in my opinion, but the numbers right now look reasonable. And if you were a seller in any other market, this would seem like a really good time to actually sell your property. Showings per listing. So this is one that is the opposite end of the inventory. This is how much buyer demand is. So month supply and the shows per listing are really corollary to each other. They impact each other, because if there's fewer properties and more buyers, and clearly they've got to go see more properties, the showings per listing is going to be up, and vice versa. But my takeaway from this is, clearly this was abnormal time period right here. Low inventory, lots of people looking for properties, low interest rates, et cetera, et cetera. Now it really seems to be a return to normalcy across the board. So all in all, these aren't surprising. I would say, if anything, the fact that that's gone up was a good sign that there was more buyer demand, because there was, let's see if I'm right when I say that there was more inventory. It was going down, but not, yeah, it's going down. So it may just be a function of that. But again, it shows some normalcy across the board. The next one, let's get into just the pure raw data. Houses for sale throughout the month of February, just under 2,000 in Collin County, just over 3,000 in Dallas County, and just over 2,000 in Denton County. The new listings, so these are the new properties that hit the market in the month of February. You had just over 1,000 in February. You can see that it took a little bit of a downturn. I suspect that it's partly due to the fact that there's a few fewer days in February than other months. So I kind of treat this as more of a flat than a downward turn. But we'll see what happens in March. That's going to be one of our telltale signs, which is a good reason for you to subscribe to the channel so that you can know, you can see my next update and see what predictions I made that were right and which ones I made that were wrong. Pending sales, this is the one that's going to show us like these are under contract properties that are waiting to close. So this is a really great leading indicator to where things are going to go. You're going to see this in the close section. I'm very certain that since in December they were down and in January they were up, you should see the closed sales up. It's going to be a surprise to me too when we get there. So we'll wait. Hopefully I'm right. And then you see it dip down a little bit in February. Again, I think that's a blip just because of the fewer days in the month, but we'll see. And so let's see if I was right. So we're saying that December to January went up. So February sales should be up, and they are, which is good. So this just shows again that what we saw in the pending sales was up. So, so based on this, they probably will be flat, quite frankly, in March, just as we follow that trajectory, maybe a little up, maybe a little down, just because we have more months. So some of the holdover may push that up. So it'll be interesting to see what that is and whether or not I was right or wrong. But this is really the data, the most recent data about what's been going on in the North Texas area. Hopefully, this gives you a sense for really the climate that we're in, what's going on. As I said before, the interest rates are really, I think, going to be the driving decider of what happens. So what do you think? Do you think that the Fed is going to crash the home market in the DFW area, or do you think we're just going to plow through it and people are going to live their lives and move forward? Let me know what you think in the comments. Let me know what other information you're interested in hearing about. How can I make these videos more effective for you? What information do you want? Let me know in the comments. I want to be a resource for you out in the community. Let me know how I can assist you in the future. If you need anything, feel free to reach out. I hope to talk to you soon. See you next month, if not before.